He's back. Former regulator, but still a scumbag. Gary Gensler makes an appearance, and it seems like he is a Bitcoin maximalist now. I'll share the clip of what he had to say. And Fed Chair Jerome Powell makes some very interesting statements about crypto and stablecoins that you need to know about. And we're going to talk about global liquidity on the rise, and could we see Bitcoin in the crypto market make a move soon? Let's get into it. Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, I took a few days off. It's great to be back. It was spring break this week for my daughter, so me and the family, we went on a little trip. And although I'm battling some allergies right now, so pardon my voice, but I'll get through it, taking some meds. But it's great to be back, and we got a lot to cover, so let's get into it. So first up, we want to talk about the price of Bitcoin. Not much happening, guys. We're still waiting for Bitcoin and even the stock market to break through that 200-day moving average. You can see here on my screen, I'm zoomed in. But we need to see higher highs and higher lows. And as I always say, let the market prove itself. Let it show us that it has strength and that this is indeed the reversal for the rally upwards. I still believe we are in a bull market despite this very harsh correction that we experienced with the macro uncertainty of tariffs. And the catalyst that could help us get above these moving averages and have the strength could be the resolution to the U.S. and China tariff battle that's been going on, in addition to the Fed making a move of cutting rates or signaling they're returning to money printing. And there's a bit of a battle going on between Fed Chair Jerome Powell and Donald Trump. But I believe that's all a political show. It's just political theater. One thing we know about this fiat currency system, we have to go back to money printing. There's no way around it. So one way or the other, they're going to get there. This is where we have to be patient and just sit back and let the liquidity continue to rise. And what we are seeing is that global liquidity is breaking out like crazy. It's going parabolic. That's very good. We've seen this result in massive rallies for Bitcoin and the crypto market, even the stock market, because all these assets are correlated to global liquidity. So here, analyst Crypto currently said, can't stop looking at this chart. And his chart shows global liquidity and Bitcoin. He says, we really have a full breakout on the global liquidity index, first time in 3 years, and Bitcoin is consolidating. Anything can happen, of course, but the future looks so bright. So as always, there's no guarantees here, right? We don't have a crystal ball, but looking at the data now, not our feelings or emotions, we're seeing the patterns we've seen historically, and that could play out very well. Even macro investor Raoul Powell shared his data chart showing global M2, essentially global liquidity, and that it is surging as well. So multiple data points are showing this, guys. He says, I know many of you want to see the updated version of the Bitcoin versus global M2 chart. Here it is. Just a very small part of the weekly macro investing tool. It is time, give or take a few days. So he's saying we could see some sort of rally soon. And I think seasonality wise, that makes sense. Obviously, this tariff situation has really put a dark cloud over markets. And it's not just crypto, of course, but at some point, the markets will price this in. They'll find their bottom and start moving. We've seen this historically, whether it be 2008, whether it be 2000, the dot-com bubble pop, right? All these things go back to all the major crashes in history. Markets find a bottom and they keep going. What we have to do is, of course, be patient. And that's the hard part. And you can listen to Warren Buffett and read the books about him and what he talks about patience when it comes to investing and even emotional control, not being emotional about the markets. Yes, it's hard. Yes, seeing your value of your portfolio going down is hard. It bothers me as well, right? That's why I've often said, don't look at your portfolio when we go through these parts. I haven't been looking at my portfolio. I'm being very honest. I have not been looking at it because I know there's the mental battle there, right? Oh my God, my portfolio is down. I'm not going to hit my financial goals. We're all human. We go through it, but part of investing, and this is not playing the lottery, and this is not going to the casino. This is having a macro view, a long-term view, and staying the course. Obviously, there's something detrimental happening to a specific stock or crypto you're holding. You want to liquidate it. But outside of those things, You just want to sit back and ride the wave here, the global liquidity wave. So I think in due time, guys, we're going to see a rally upwards. Now, Fed Chair Jerome Powell made some big statements around crypto. He says crypto is becoming more mainstream and legal framework for stablecoins is a good idea. So we've seen over time Fed Chair Jerome Powell make statements about crypto that it's here to stay. They're not going to ban it. And I think they absolutely agree with the stablecoin idea because this will help the US dollar maintain its world reserve currency status, especially as stablecoin issuers are going to buy treasuries, right? And the US won't have to depend on China and other countries. You know, Jerome Powell mentioned stablecoins, and Standard Chartered this week put out an article saying they expect the stablecoin supply to surge to $2 trillion by 2028. So I think we could get to $1 trillion by the end of this year, or if not to next year, if stablecoin legislation makes it through. Because once you have the clarity, the banks, all these big institutions are going to be able to launch their own stablecoins, guys. And the United States wants this, by the way. They need to do this because this will help the US dollar, because there's BRICS nations trying to bypass the US dollar. I'm sure you guys are up to speed on what's happening there. So allowing different institutions in the United States to launch these and then push these USD-backed stable coins into different parts of the world will help the world reserve currency status. So big stuff here. Now, we got news that the SEC has announced details for its third crypto policy roundtable. And these roundtables have been great. They've been live streamed. There's a lot of transparency, so I love it. They have an April 25th event, which will focus on custody issues, featuring 2 panels, one on broker-dealer and wallet custody, and the other on investment advisor and investment company custody. So you're going to see folks from Fireblocks, Fidelity, Anchorage, Kraken, Exodus, and much more. So guys, we're seeing some of the biggest in the industry coming to meet with the SEC here, and it's amazing to see this happening. It's a far cry from what was happening over the past 4 years. Now, speaking about what was happening over the past 4 years, look who crawled out from under their rock at MIT. Gary Gensler, the scumbag regulator himself, or former regulator, but still a scumbag, Gary Gensler. So this guy is unbelievable. And as usual, he goes on CNBC. He doesn't answer questions clearly. He dances around the questions. But he made some surprising statements that have Bitcoin maxis kind of going crazy, like, oh, Gary Gensler is a Bitcoin maxi now. And for some of those Bitcoin maxis who are low IQ, if Gary was such a Bitcoin maxi, why did it take a lawsuit for him to approve the Bitcoin spot ETF? That he had to be called arbitrary and capricious to approve a Bitcoin spot ETF. Yeah. Because he's not no Bitcoin maximalist. He is anti-crypto because he was told to be anti-crypto by Elizabeth Warren, who was his controller. And of course, they were lobbied by the big banks, right? Jamie Dimon and all these guys. That was the whole plan. That's why he attacked crypto like that. So, you know, Bitcoin maxis, they're grasping for straws here. Oh, Gary's big, you know, he's a Bitcoin max. Yeah. Gary, you want Gary to be your leader now? Really? I mean, the guy who had to be called arbitrary and capricious to approve a Bitcoin spot ETF, the guy you claim was a Bitcoin maximalist, had to have the courts do this to him to approve a Bitcoin spot ETF. Again, logic, reason have been thrown out the window with some of these guys. But let me play the clip of what Gary had to say.
Hey, Gary, final question for you. As you probably watched, so many CEOs were doing almost victory laps in the crypto world as these enforcement cases were dropped by this current administration of cases that you had brought. As you watched that, what did you think?
Look, I'm going to step back a little bit from any individual cases and just say this again to your viewing public. This is a very small part of the financial markets, but if you were interested in this, think about every financial asset sort of trades on a bit of fundamentals and sentiment. But this field is almost 99, or maybe one might say 100% sentiment and very little on fundamentals. And while something like Bitcoin may persist for a long time because there's 7 billion people around the globe, a real keen interest in it, there's 10 or 15,000 others of these tokens. And to think through your own risk, your own personal risk about where are the fundamentals. And if this is just about sentiment, then generally those don't end up well, and most then go down.
Are you talking, you're contrasting Bitcoin with the other ones, or they're all the same?
Joe, I'm glad that you spoke up, because I know you're a bit of a Bitcoin enthusiast and think less well of the rest of those. It's how you and I have always connected in the green rooms. Right. But think of these 10 or 15,000 other tokens, and just on the economics, just on the fundamentals, what are the fundamentals?
No, I know. But that was my question. You throw Bitcoin in with the rest of them, or do you think Bitcoin is different is qualitatively different than the others?
I think there's the distinction is similar to in metals. There's only 2 or 3 precious metals. We humans have a certain fascination with 2 or 3 precious metals like gold. I don't think we humans will have a fascination with 10 or 15,000 meme or sentiment tokens trading over the years.
So there you have it, right? And he tried to compare everything else outside of Bitcoin to memes and sentiment tokens, when many of these blockchains have big institutions. I'm talking BlackRock, Fidelity, and much more building on them. What's on the screen there next to Gary, Ethereum, Solana, and XRP, those have a lot of institutional investors, specifically Ethereum and XRP. Solana, not so much. Now, you could argue there was a lot of meme coins on Solana, right? Yes. I mean, he may have a point there, but at the end of the day, there's more than meme coins being built. So he's being disingenuous as usual. He's still, with that same old narrative. And it wouldn't surprise me, Elizabeth Warren told him that, hey, crawl out from MIT and come say something on TV, because we can attack, let this current administration about it, and so on and so forth. But typical Gary, right? What are you going to do? He's a scumbag, and he's going to continue to be a scumbag. But guys, one thing's for sure, it doesn't matter what Gary Gensler does. Disruptive technology always wins. I'll give you an example. Telecom companies back in the 90s were trying to block the internet because people were going to use the internet for voice over IP, being able to do calls and all that. They tried to fight. So they were the incumbents. Same thing's happening here. Banks and payment companies, we got to stop these crypto guys. We got to stop the stablecoins. They're moving value. They're investing in these things outside of us. Same thing's happening here. And of course, they have their dogs on the leash like Gary. And of course, he was, the call was made to him. He's a Goldman Sachs guy. The call was made to him, and he did what he had to do. But he got defeated, of course, and he's still going to run around, trying to talk his BS. But it doesn't carry any weight anymore. Everybody knows he's a clown. Anyway, guys, quick word from our sponsor, and that is Uphold. Uphold is one of the top crypto platforms I've been using since 2018. You can buy, sell, trade cryptocurrencies. They have 300 plus cryptocurrencies. They have staking. They just re-added staking rewards for 19 cryptocurrencies. And they are fully reserved, guys. They don't commingle or lend out your crypto funds. And you can review their transparency report. They also have a great rewards program where you can earn up to 5.25% on stablecoins, such as Ripple's RLUSD, PayPal's PYUSD, Circle's USDC. And to participate, you have to open the app once per month, deposit $50 once per month, and trade $50 once per month. And you can earn, once again, 5% on USDC, RLUSD, and PYUSD, and 5.25% on USBC. And they don't do any shady stuff. I interviewed the CEO to learn about where's the yield coming from. So they're doing this the right way. No shady stuff. They're not lending out to a whole bunch of other people and creating a setup where, if something goes bad, there's a domino effect. And, we saw this, what happened in 2022. They're not doing anything like that. They're doing it the right way. So if you'd like to learn more about Uphold, check out the link in the description. Now, guys, look at this. Binance is reportedly advising global governments on setting up strategic Bitcoin reserves. So we've been seeing CZ, while he's not working in a full capacity at Binance, he's been meeting with different governments and becoming an advisor, a crypto advisor. He met with the folks at Pakistan and Kyrgyzstan. And it's incredible that Binance is doing this, and they're still the world's largest exchange. So they have a big brand, and there's clarity now. They're kind of out of the woods with regards to what was going on with CZ and the fines and so forth. So it makes sense that they're going to do this because they can get these governments to buy the coins from them and even custody, right, if they choose to. But a smart move by Binance. So let me give you the details. Cryptocurrency exchange Binance is involved in discussions on establishing strategic digital asset reserves with several countries. Its CEO, Richard Teng, reportedly said Binance has been advising multiple governments on establishing strategic Bitcoin reserves and formulating crypto asset regulations, Teng said in an interview with the Financial Times on April 17th. So here's a quote. We have actually received quite a number of approaches by a few governments and sovereign wealth funds on the establishment of their own crypto reserves. Guys, how things have changed. A paradigm shift is taking place. I couldn't imagine this in 2016 when I got in. So it's incredible, just amazing. And sometimes I have to pinch myself because it's surreal having experienced the opposite of governments spreading FUD, saying all types of negative things to now, oh, we want to set up a crypto reserve, right? And we're going to work with exchanges. Incredible stuff. Now, speaking of institutional adoption, Franklin Templeton, the Wall Street powerhouse, they have formed a partnership with Standard Chartered and OKX crypto exchange. So they tweeted out that Standard Chartered and OKX have launched a collateral mirroring program, allowing institutional clients to use crypto and tokenized money market funds held by Standard Chartered on the OKX exchange. Brevin Howard Digital will be the first to participate using Franklin Templeton's tokenized platform. Guys, I'm sure many of you have seen my interview with Sandy Call, who heads up digital assets at Franklin Templeton. I've interviewed her 2 times. If you haven't, check out the interview playlist. They are doing a lot, and they don't get the big headlines like BlackRock or Fidelity, but they're doing a lot. They're building a lot of products, and this is a huge partnership. Standard Chartered, a bank, right? And OKX, one of the largest exchanges in the Asian markets. They're not fully functional in the United States due to regulations, but I think second to Binance, they have the most volume, if I'm not mistaken, but huge news here, guys. I hope you see what's happening. Final news item, Treehouse Finance reaches $400 million token valuation in new funding round. So they have raised an undisclosed amount with a $400 million valuation. The figure represents the fully diluted valuation of Treehouse's yet-to-launch native token, co-founder and CEO Brandon Go told the block. So notice this, guys. They're raising a lot of money. The token is not launched yet. So this is why I've been saying I'm looking forward to the future bull markets. There's going to be new blockchains and new tokens out there, and you want to follow the money. What are the VCs and hedge funds putting their money in? And it could be opportunities, right? This is the first time I'm hearing about Treehouse Finance. I don't know much about them, but I think they're more of a DeFi protocol, but I'll give you the details. But pretty incredible, right? Capital still coming in. Token projects are still getting funded, guys. These are all signs of growth and health in the market. So Go said the funding round was structured as a simple agreement for future tokens, the SAFT token, SAFT, if you want to call it that, and closed late last year. He added that Treehouse's previous $18 million seed round, completed over 3 years ago in March 2022, was also structured as a SAFT. Treehouse Finance did not name its lead investor, but described it as a venture arm of one of the largest life insurance and financial firms managing over $500 billion in assets. The article says here, the investor appears to be Mass Mutual Ventures, which also backed Treehouse's seed round. Guys, look who's involved here. Pretty incredible stuff. So, just so you know, Treehouse is betting on a DeFi fixed income becoming a major market, tapping into a $600 trillion opportunity from traditional finance. So essentially, as they tokenize all the traditional assets, there's going to be opportunities for DeFi. And as they highlighted here, fixed income DeFi. Now, we got to make sure the infrastructure is right. We got to make sure these things are tested, because we've seen DeFi get exploited big time. And I've often said that doesn't mean DeFi is not going to exist. The point is that version 1.0 of anything, especially in the early days, it's going to have flaws. There's going to be bugs, and it's going to be open season on it, right? Because hackers and all these guys are going to attack it. But I think further iteration, you'll have better software here, better protocols, better setup where it can't be hacked. And I'm betting the institutions know what they're doing here, and they're going to build things that are much safer. So, guys, I mean, I see the names that are getting involved here. It is companies and people who have been around before the crypto market, and now they're all getting involved. Some of the biggest names. I mean, I just told you guys about Standard Chartered, Mass Mutual. Those were around before crypto, and they've been doing their thing, and now they see what's on the horizon, that this technology is here to stay. So big things are happening globally, guys. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Great way you can support me in the podcast is by subscribing to my free email newsletter. It's on Substack. Check out my book on Amazon. It's available in paperback and digital. And check out my new course at mycryptocourse.com. It's a comprehensive course that teaches you every aspect of crypto. Guys, thank you so much for watching and listening. I appreciate you all, and I'll talk to you all later.